In this video, I'll be talking about market structure. And if you have not watched my previous video on the foundation of Forex market analysis, you need to go and watch it because this is the continuation of that video. And also to get notification on my next video as soon as they are uploaded, you can subscribe to this channel. You can also drop your comments in the comment below, in case if you have any question, and I will respond to you immediately. So now, what is market structure? Why do you need it? So market structure is a price action techniques that uses the price of the market highs and the lows, otherwise known as support and resistance, to determine one, the trend direction of the market, two, the potential trend continuation, and three, the potential trend reversal. So that is why having a perfect knowledge of market structure in Forex trading is very, very important, because without you knowing the direction of the market, where the possible reversal might take place, or whether the trend is continuing, if you don't have those understanding, being profitable in the Forex market might be difficult. So you need to have the perfect understanding of what a market structure is for you to be successful in Forex trading. So therefore, having a perfect understanding of the structure of the market will give you an edge in the market. So as a Forex trader, before you think of buying or selling, the first thing you must do is to study the structure of the market for direction. So what do I mean? If you look at my screen now, you will see this, the highs. Remember, I said we talk about the highs and the lows. The lows, the high, the low, the high. Or you can say the higher low, the higher high, the higher low, the higher high, the higher low, the higher high, and so on. That is a structure in the market. So now, how do you use this to determine the direction of the market? How do you use it to know the trend continuation or the trend reversal? So to look at this drawing that I have here, the high, the low, the higher high, the higher low, the higher high. This is the structure of a particular market, the price movement of this particular instrument. So if you look at these points now, here you have a high, or here, let me start from here. Here you have a low, here you have a high, here you have another low, here you have another high, here you have another low, here you have another high. So we call this one the low, the high, the higher low, higher high. Or you say the higher low, the higher high, the higher low, the higher high, the higher low, the higher high, and so on. So how do you use this to determine the trend of the market? When you have an higher high, when the market begins to create higher highs, that means you have an uptrend. The direction of the market is up, or bullish, or buy. So when you are having higher highs in the market, that means you are to do what? You are to buy in that market. You are to look for buy opportunity when market is creating higher highs. As soon as you have a break of structure, so we call this one here break of structure. So when market creates a low, and it creates an higher high. It creates another higher low. The moment it creates an higher high, this particular point you are looking at, where my cursor is now, is a structure that was broken. We call that place a resistance. So this resistance that was broken to create an higher high. Okay, the resistance was broken here to create an higher high. So this is a structure here that was broken, and this gives you the confirmation that this market is moving up as soon as this structure is broken. So when the market is creating higher high and higher low, that means you are having an uptrend. You can see the movement up here. So for the bearish now, we have the low, the lower high, the lower low, the lower high, the lower low, and so on and so forth. So the moment the market begins to create lower low, as we have it here now, the moment market begins to create lower low, as we have it here, lower low, otherwise known as support. So the moment it's creating lower low, then you are having a downtrend. When the market is creating higher high, what are you having? You're having uptrend. So that is it. That is how you use market structure to get the direction of the market. Now, how do you use market structure to know whether there will be trend continuation or a reversal? How do you use market structure to determine that? Now, if you look at my uptrend now, let me delete all this. What we are particular about for the uptrend is the highs, the higher high. As soon as the market is breaking the previous high, then you are having an uptrend. So now, how do you use the market structure to know whether a trend is continuing or not? So when the price break the previous structure, as we have it here, this is a structure, a resistance. The moment the price breaks this resistance that we have here, then we say we have an higher high. So when it breaks it, we say we have an higher high, and that gives us an uptrend. Okay, so that is how you determine an uptrend. When a price breaks the structure, the price breaks the structure of the previous high to create a new high, then we have an uptrend. Now, for the downtrend, for us to know the downtrend, when the price breaks the previous low, as we have it now, we have a low here, a pullback, then it breaks this previous low that we have here. The moment the price breaks this previous low, then we say we have a lower low, and the market is in downtrend. So for you to know, use the market structure to determine the uptrend or the downtrend, you need to have two highs for the uptrend and two lows for the downtrend. What do I mean? Like, for example, for the uptrend now, you have a low, higher high, higher low, higher high. So this 1, 2, 3, 4. That is when you can join two. When you can join two lows together like this. Excuse me. Let me use when you can join two lows together like this, then you have a trend, an uptrend. That is the two lows, the lower low, the higher low, the higher high, the higher low. The moment you're able to get, so you say the trend has started. For the downtrend, the moment you're able to join two highs together like this, that is the lower high, the lower low, the lower high. The moment you're able to join two highs together, then you have a downtrend. Remember, two lows start an uptrend, while two highs start a downtrend. Okay, so that is how you determine the direction of the market to know whether you have to buy. And when you have an uptrend, what do? You buy. When you have a downtrend, what do? You sell. So that is the first thing you need to understand as a forex trader before you can click whether you buy or sell. You need to know the direction of the market first. And with the help of the market structure, you are able to know the direction of the market. So now, how do you know whether trend will continue or it will reverse? How do you determine that using market structure? Now, if you look at this now, here I have my higher low, higher high, higher low, higher high, higher low. And here I have a failure swing. So here I have a failure swing. The moment the market cannot create an higher in an uptrend, market cannot create an higher high. That means there is a potential reversal. So the moment market cannot create a new high, a potential reversal is looming. You know, here there is a break of structure here. This move broke this structure, created a new high, pull back. But the moment it couldn't create a new high here, then you should be watching out for a potential reversal. The same thing for the downtrend. When you have a lower lower high, lower high, lower low, lower high, lower low. The moment the market cannot break this guy, let me correct that. So the moment the market cannot break this trend line here, that means there is a potential reversal. For a continuation, market must be able to break that structure. The moment market is unable to break a structure, that means we should be watching out for a potential reversal. But when market breaks the structure like this, before reversing, before pulling back, that means there is a continuation. There is a market price continuation or trend continuation. But the moment is unable to break the next high or the previous high, that means there is a reversal. But when it's able to break this previous high we have here, that means there is a trend continuation. So that is how you use market structure to determine the direction and the trend of the market, direction of the market, the trend continuation and trend reversal in the market. So now, so if you look at this, is the beginning of this trend, okay, of this Euro USD. If you look at this guy, that it started from here as the higher low. Now, how do we determine whether this Euro USD now is in an uptrend or a downtrend? We start from the beginning, from the left, okay? Then you look at the first low. This is higher low. Then this is higher high. We have another higher low here. Then we have another higher high. So the moment you have higher low, higher high, higher low, higher high, then we have an uptrend. So this market now is in an uptrend. So before you can say this trend has changed now, there must be a break of structure to the lower side. Like for example, when this market reached this place, when it created this lower low here, and it got to this place, it couldn't break this structure to create a new high. So at this point now, we can say we have a trend reversal in this place, because since it cannot create a new high, it couldn't break this structure. So this is a potential at this point now, this high here, we have a potential reversal. But we can't say at this point that we have a reversal until this structure down here is broken. Until this structure down here is broken, that is when we can say we have a reversal. But now if you look at it now, that this trend here, this low here was broken. So the moment this low here was broken, that means we are now in a downtrend. And you can see that market has beginning to print lower high, lower low, lower high, lower low. So the moment you have two highs, two low, then you have a change of trend. So for this one now, we have here a change of trend here. The moment it breaks this low here, we have a change of trend. After this pullback, then the market trend direction has changed already. So this Euro USD now is now in a downtrend. You can see it has now beginning to print higher, lower high, higher high, higher, lower high, lower low, lower high, lower low, lower high, lower low, lower high, then another lower low. So for this one now, we are in a downtrend already for Euro USD. So Euro USD now is in a downtrend. So that is how you know the direction. But it's currently pulling back now. So it's currently, we call this one retracement, pulling back. But this market is in downtrend already. So any opportunity you want to be looking out for now in this market is sell. So that is how to use market structure. And for the other one, this is for downtrend now. Okay, we have the uptrend there, we have the downtrend there. So when you have a market printing higher highs, higher low, higher high, you have an uptrend. But when you see it printing lower high, lower low, lower high, lower low, lower high, lower low, and so on, you have a downtrend. So that is all you need to know about market structure, and now you can use it to improve your trading, because that is what is going to give you the direction of the market, and for you to know whether the trend is going to continue or reverse. So like for example now, since this guy here now has broken this previous low that we have here, that means this trend is continuing. This downtrend is going to continue, because this has confirmed this trend downward, that this downtrend is going to continue. So far, it has broken this low that we have here. So far, market has broken this low. So this downtrend still continue until you get to this final stop here. So far, it has broken the previous structure here. So the downtrend still continue here. So what the market is doing now is retracement. So until it breaks this structure here, this structure we have here, we are not yet in an uptrend. So far the market has not broken this. Unless the market break this structure we have here, that is when we say, okay, we are resuming an uptrend. But so far, the market has not broken this one. We are still in a downtrend because this has confirmed the break of structure here has confirmed the downtrend, and the downtrend is still continuing. We have a downtrend continuation. So any opportunity you want to look for in this Euro USD will be sell opportunity, sell opportunity. If there is going to be any buy at all, it's going to be a short buy. Okay, so here on Euro USD, I say we are still in a downtrend. So thank you for watching this video. Bye bye.